is long term. The hardest thing to do is not lose your shit. Every newbie who comes in loses their shit. You tell them, hey, listen, because of the tightening of financial conditions last year, the market's going to start weak. They're like, yeah. When it happens, it's like, oh my God, what's happening? I'm like, I told you, the market should be weak because of the financial conditions. Another week later, what's going on? Nothing. The market's going to be tight. And then they start assigning narratives to it. And everyone starts to, and that's why I try and be flippant on the podcast to get people to understand that what they're doing is building narratives to describe why the price action is, and it may not be the accurate narrative. So it's like suddenly they go from, oh my God, we're all going to be rich, to Trump's ruined everything, tariffs are going to destroy the world's going to go into recession, this is the worst thing ever. Maybe it's not that. Maybe it's as simple as the flow of liquidity into markets, and over time, crypto gets adoption. So that's why I try and just lighten it up, because I know we've talked about this before. All of our life savings are in this, right? It matters massively. That was Metcalfe's law. That's how this price is actually priced. So Metcalfe's law is how to value networks. It's how Amazon was valued, Google was valued, all of these things. And what it is the number of active users and then the total value transacted. So are those users valuable? So the Bitcoin network has a lot of users. They don't do anything except buy and hold and trade a bit. But the value of that is a lot. We've got sovereign states buying. So there's big numbers. So that's why Bitcoin is worth more than everything else. Ethereum has a huge number of users and then comes into the space. Just buy Bitcoin. And dollar cost average. So buy some with your paycheck and hold it and get a feel for it. And everybody I've taken down that journey, at first they do that. You're usually giving them that advice when the market's going up. Then they have the correction. They have to learn, oh my God, it can go down 40% as well. Am I going to lose all my money? They have to go through all of this. But that's the learning curve. And then after a while, they get used to the volatility and they become numb to it. And then you can say, okay, have you listened to podcasts? Have you done research? Have you been on Twitter? Not to listen to trading stuff, but just to understand what is this technology? Because Bitcoin is just a part of the space. It's the digital gold is the store of value. But then people they want to get more speculative in the space. They want to try and make money. So then you start saying, okay, listen, only use the top 3 or 4 projects.
Yeah, but so I'm the Uber driver or anyone else
can see this, and there's a different set of signals they look for. So I don't. So I have, that's the one meme I've got still. Oh, and I own Doge.
Do you still have faith?
Do I still have faith in the chicken fish? Yes. Lord Vishnu will save us, will rise from the ashes. But I don't know and I don't care is the point. It's fun. It's fun to do. And whether fart coin's your fun or whiff's your fun or bonk, it doesn't matter. Just don't let it be a large part of your portfolio, because the probability is something like 85% that it'll go to zero.
Yeah. Only 85%?
To go to zero.
Oh, yeah. Something I learned with the Luna thing was it never goes to zero. It goes to 0.1, then to 0.01, then you can always add a zero. And you
can also fall another 90%.
It's crazy. It's actually, I'm laughing, but when you're in the thing, like, it's not funny.
I'm
terrible.
Surprised that Luna didn't become a meme coin. I thought it was going to happen, where people just rage bought it for the hilarity of it.
That was the narrative that a bunch.
As long as the central banks keep printing money and this technology gets adopted, you'll be fine as long as you're adhering to not being too far out the risk curve. And then you need to be paranoid about every single other part. Because don't forget, in the end, we go back to the point I made earlier, everybody's life savings is in this. This is the single most important thing for most people in their financial lives. And there are so many ways you fuck it up by getting a little bit greedy. Does the 6% yield actually matter to you? Oh, but it gives me cash flow. But if I'm 6%, you get 6% and there's a percentage chance of losing all of your money, and you don't know what that percentage chance are. Now, that's not the case with all DeFi or anything else, but to put their capital, because they understand the risks, where are the counterparty risks, all of that stuff. And if they want to get the extra yield from doing that, great. Your Brevin Howard hedge fund and you've got cash and you want to reinvest that, or you've got crypto holdings, that's your job. But for the average person to see 20% yield and that this is amazing, I'm going to be rich, you don't know what risk you're taking.
I know a bunch of, you know a lot of very OG Bitcoiners. I know a bunch of them too, who made billions of dollars with being early. A bunch of them think that what Saylor is doing is retarded, and the others think he's a genius. What do you think?
I don't know.
It's so hard, right?
It's so hard. And I think it's either or. And I don't really know. What I do know is by him doing what he's doing, he's creating leverage in the system. So he's basically, the thing is, there's a lot of ETFs that are attached to MicroStrategy's, the 2x longs, that creates this convexity, but it also on the way down, MicroStrategy falls more. And then it starts trading at a discount to NAV. And then that blows up the arbitrage people. There's easy ways to see as this thing builds and builds and builds, how it can create systemic risk in the system, in the crypto system, and maybe in the finance system.
We talked about Tolly before and Solana. Last time you shared your crypto portfolio with us. Let's have a look at what changed. Probably nothing, or almost nothing. You own a majority of Solana. Is Sol cooked now that the crazy meme coin meta is behind us?
I'm massively overweight Sui.
Over Sol?
Massively.
Can I ask you, percentages wise, more or less?
I'm definitely over 70% Sui. And that's not anything to do with the foundation that I'm on. That's my just capital allocation. People that they're talking to, and like Christian, who's the head of the foundation, his opening question now to projects that want to work with Sui is like, well, show me the path to 1 billion users. Right? Because it's built for that scale. And if you're leading with questions like that, is like, yeah, okay, it's interesting you building this, whatever, but is this going to bring me 1 billion users? If it's not of high priority. And so their mindset is really big. And they back it up by, all of the projects that they've been launching. So, I've been privileged to be on the foundation to see the inner workings of an amazing group of people, and see how they all come together. They're basically all ex-Facebook and Google. And they're very smart. They understand scale. They understand how to solve really difficult things, Walrus, stuff like that. It's super interesting. And so I think the market's picking up that narrative. Now, it's very early stage, it's going to have to go through a bear market. It'll go down a lot because low free float goes down a lot, like it goes up a lot. And then you need to see how well does the team manage a bear market? Do they have cash? Are they investing? Are they building?
When you say take some lifestyle chip, do you have a time frame? Do you have a price target, for example, for Sui, or do you have an dollar amount that when you reach?
Yeah, it's
what's
kind of
the best way to look at that? Because it's so hard, right? Like
it's
to do
so
the right
hard.
thing.
And it's a function of where you are in the cycle. You want to de-risk a bit earlier than you feel comfortable doing.
Yeah.
Because then the back end of the cycle can play out short or long. It doesn't matter. But you need to have enough wealth that you're feeling a little bit hubristic, like, oh, I king shit. That's when you take some money off. As soon as you start thinking, you start thinking, well, if I just double it again, I'm going to be just take some money off. We've not got there yet for me. So, another larger move in the cycle, I'll then take some money off, and it'll feel too early and I'll hate doing it and I'll regret doing it, but I know it'll be the right. I'm just going to buy a tent and put it on the beach where it's really hot, the mosquitoes bite, and said, well, that's where you're going to suffer for doing these stupid things. You're not staying in the house, you're staying in the tent and on the beach.
It's probably not that bad in the Cayman.
I don't know, the mosquitoes can be bad.
You said that your beta to Sui is the Deep token.
Yeah.
What is Deep Book and why do you have a bag?
Deep Book is the liquidity layer for all of the Sui ecosystem. So basically, if you think about it, the more Sui gets used, the more Deep Book is used because that's the liquidity. And it's a smaller token and it outperforms. Now, will that continue in perpetuity? No, but at this stage, as Sui becomes more known and more people are using it and realizing how fast and cheap and efficient it is and what you can build on it, the more liquidity has to increase within it. And that's the liquidity layer. So it's kind of simple. Walrus is much harder because Walrus itself is this decentralized distributed data layer. It's groundbreaking technology. It's super interesting. It's multi-chain, all of this stuff. But it is its own beast. People are going to make money, and art is upstream of everything. And the reason being is, like, I don't know if do you know Tad Smith? So Tad is part of Dan Tapiero's 10T or 1RT. He used to be the CEO of Sotheby's. And his nice stat is the average billionaire's house has 10 times the value of his house in art. Why? Because when you're a billionaire, beyond about 5 houses, it's a fucking pain in the ass. So they buy art. Art is storage of wealth that is outside of the system, that is transferable, ish liquid, not really, but ish, and it socially signifies your status. And so what we've got here is we're about to create a lot of wealth, and people will flow to art. The other thing that's happening is as you create good times and bad times, you create culture. And the culture of the internet is often led by art, the culture of everything. Now, art could be music, art could be street art, graffiti art. Prices rise, but this is not a trade. This is an investment. So, you know, I own a lot of this art now, and I just think of it as a 10-year plus time horizon. Like, I've got a house, so I don't need a house, but this art, I can appreciate. I can enjoy the culture, being involved in the community, which is amazing. But in the end, I've got an asset that's going to be valuable because it's going to be scarce and there's going to be more money around chasing fewer goods. And these goods are highly sought after. And so I think of a longer term time horizon. You know, if I go back to, I think the conversation you and I have had, once you get to the economic singularity of when the AI and the robots are basically running the economy and we don't know what we need money for and stuff like that, a digital store of value like that is extremely valuable.
What's the logic?
The logic is, as we live in an increasingly digital world, we will value digital things in the same way we value physical things. Now, physical high outcome. ETH's cooked. All the developers were wrong. This massive ecosystem, they fucked it up with the layer 2s. Nothing accrues. What's the point? It's all broken. Solana's going to take everything. Okay, I hear that narrative. My narrative is they've overbuilt capacity for what the system needs right now. They will adjust some of the accrual mechanism back to the layer 1. But EVM is Microsoft. Every bank, every insurance company, every major company in the world uses Microsoft. Not Apple, not Google. Why is that? Because you don't get fired. And once it's in, and somebody explained this to me yesterday, it was a really interesting thing. It's like, once you have enterprise sales model, it is almost impossible to extract it from a business, which is why banks are still using Cobalt. And it's because you don't want to change it because it's working and you've learned how to do it. And nobody wants to take the risk of saying, oh, the whole company, we're going to turn to X. So I had a conversation last night with one of the most famous VCs of all time, who's in crypto and was in fintech. He's still a fintech. And he was worried about this, is the talent density moving to AI. And hadn't really thought that through, but he said, look, you know, I don't see developer growth growing fast enough. But, you know, one thing I do know is crypto has a superpower: behavioral incentives of tokens. And in AI, you might get a nice job. It's not clear whose equity is going to be worth anything. But tokens are fast to accrue value. And as the market starts pushing higher in the phase 2 of the banana zone, they'll come. So I'm not overly concerned by it, I think.
When is banana zone phase 2 starting?
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.